Hey, everybody, we are going to talk about some dividend stocks that are on our radar today. Mine's actually not a stock at all. It is an ETF that I think is a great opportunity right now. Before we dive in, Tyler is joining me. Please check out the link you see on your screen. It's Frankel or fool.com/Frankel for a message from our sponsor, the Motley Fool. You get the top 10 stocks to buy right now, and it's a great way to support this work we're doing. Again, that is fool.com/Frankel. So I'll go ahead and kick this off because Tyler has a stock. I have an ETF, but I'll go ahead and start with mine. I am
Dividends are
looking at
dividends,
two
buddy.
groups of stocks right now. Dividends are dividends, and if you can get a great dividend investment without the guesswork or research involved with picking an individual stock, then why not? So the one I'm looking at right now is called the Vanguard Small Cap Value ETF. The ticker symbol is VBR, and I like it because it's a combination of two different groups of stocks that I really like. One, small cap stocks. Small caps are trading at their lowest valuation relative to large caps in the past 25 years. And last time that happened, it preceded a 14-year period of outperformance. Um, and I'm not just talking about the Magnificent Seven stocks that are trading at astronomical valuations. Small caps in general are trading at very, very low price to earnings multiples compared to how well they're doing right now. And the other is value versus growth. Growth stocks are commanding a big premium right now, which is really surprising given the interest rate environment. When rates started to rise, that's when we saw growth stocks get crushed in 2022. Value stocks are relatively undervalued right now relative to growth. So the Vanguard Small Cap ETF kind of combines both of those. It's one of the larger value stock ETFs in the market with about $53 billion of total assets. It owns a portfolio of right around 850 stocks. So it's a very diversified ETF. No stock makes up more than 1% of its weight. It is a weighted index, but because of that vast number of positions. So just to kind of put this kind of disconnected value between value and growth and small caps and large cap into perspective, the average stock in this ETF has a price to earnings multiple of less than 14. It's 13.7 right now. So 13.7 times earnings for the value stocks in this index. And the average earnings growth rate of a company in this index is 12.5%. That's a really impressive growth rate for such undervalued stocks. Pays a very nice dividend because value stocks are more likely to pay dividends than growth stocks. Not all small value stocks do, but it has a yield over 2% right now, so you get paid a little bit for waiting. And I like it just because it has a lot of room to benefit just as the valuation gap narrows, which I think it will. Value stocks in general have a lot to gain from falling interest rates when rates start to fall. And I just think there's a lot of economic catalysts that will be particularly beneficial to small caps. If we actually get the soft landing the Fed keeps talking about, it could be a big benefit for small caps. And I know Tyler and I have talked about small caps on the channel many, many times. I like this one because it combines pretty much everything that we talk about with small caps with the value versus growth battle that we're seeing right now. So again, that's Vanguard Small Cap ETF. That's VBR. It is on my buy list right now. As soon as I can stop talking about it in articles and on shows, I am going to add it to my portfolio. And so, Tyler, you're talking about a real estate stock, I believe. Which one is on your mind right now?
Yeah. Before I get started, I just have to say I have been digging through small, micro, nano cap companies lately, and I've been like a pig in, well, you know what. So, yes, small caps, there's a lot of fun stuff in there. The company I want to talk about, it's been really interesting to me, is, well, it's been interesting for a long time, but particularly interesting right now, is Rexford Industrial Realty. Ticker is REXR. This is a industrial REIT, or real estate investment trust, excuse me, that focuses exclusively on the Southern California market, specifically Los Angeles County, San Diego County, which, sounds weird, but hey, I love weird, number one. And number two, this is an incredibly lucrative industrial real estate market. There is almost nothing else like it in the world. Number one, industrial real estate demand is massive here. You have the Long Beach and Los Angeles port complex right there, which at a time before it basically got so congested it could barely like take shipments, there was a point where 40% of all container ships, those big steel box containers that we move stuff on rail and stuff, 40% of import exports of container ships went out of LA and Long Beach. And it just kind of gives you an idea of like how much of the industrial world kind of moves through this particular area. And I think it was like the total square footage of industrial real estate in these two counties, or three, I guess you can include Orange County as well. Just those three counties, it's like basically the entire industrial real estate of Germany. So not exactly the smallest one, but also incredibly high demand. If you look at vacancy rates, they're some of the lowest in the country. It's like less than 2% most of the time for vacancy. And their ability to raise rents has just been absurd. In fiscal year 2023, they reported way back in February, but this is still a pretty relevant number. For 2023 on its leases, its new lease rates for the whole year were up 80% on a GAAP basis, and renewals were up 76%. Like, we've been doing this for a while, Matt, and anything like in the 9 to 13 range, you're like, whoa, that's big lease agreements. So to see like a combined GAAP lease agreement increases of 77% is just absolutely absurd. And management anticipates that with kind of like the embedded leases that still have yet to come up, there are still a couple more years of substantial new and renewal lease rates that are going to be maybe not 77%, but certainly in those sort of range for the coming year. It's a incredibly well-run business in terms of management. Really sticks to its knitting. It knows this market. It buys a lot of properties off market because it knows what is coming available. So it gets incredibly good deals on what they're actually acquiring, and a management team that has been very, very good at growing per share value, which, it kind of sounds like everyone does it, but let's be honest, not every company out there is really, really good at growing things on a per share basis. They like to show you how big of a number they can make, which, doesn't necessarily do much for you as the investor. Over the past 10 years, Rexford Industrial has grown its dividend at a rate of 20% annually. And management as anticipating relatively similar increases to its dividend in the coming years. And right now, despite all of the things that have been very good, sure, interest rates are higher, and there are some, maybe this many, many years of 70% renewal leases not sustainable, obviously. But even with that, we still have a couple more years of runway. And we're looking at a company that is trading at one of its highest dividend yields in 10 years. And on a price to tangible book value, it's the absolute cheapest this company has been in a decade. And to me, this just doesn't quite jive with what I'm seeing in the financials and how this business is run. It looks to me like, of the business, of the real estate out there right now, like there's a lot where we look at it and go, well, refinancing risk and growth is starting to stagnate in residential. This right here looks like one of the better real estate opportunities out there right now.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.